Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm the senior trader at the Forex Super Model, and this is the data cycle review for Monday the 17th of the 5th to Friday the 21st of the 5th 2021. Basically it's our version of the economic calendar. We've made a start. We've gone China and the dollar, T1, T2 for tier 1 and tier 2 data. We've got April as a whole month. Excuse me, that's a discrete month. And then we've got the first 3 weeks of May in weekly form, and this is a cumulative data to see trends. So let's make a start then. So China, T1 plus 7, 0, minus 1, minus 3. T2 minus 2 plus 5 plus 4 plus 4. We'll analyse this at the end, but basically you can see that you've got a bit of a weak tier 1 on China and a plus 4 steady on the tier 2. So nothing to write home about on the China data cycle, right? The dollar then, tier 1 plus 10, minus 7, minus 5, minus 5. Tier 2 plus 3, plus 15, plus 20, plus 27. So it's a tale of two tiers there really. You've got weak tier 1 data, although we had a strong April. So we've got weak tier 1 data rolling into May, and we've got incrementally very strong tier 2 data. Okay, we'll stop it there and we'll do the next two. Right, we're off again. We've got German data and the EU as the block of the 27 nations. Right, Germany then, tier 1, minus 1 plus 3 plus 3 plus 1. Tier 2, minus 5, 0 plus 3 plus 5. So we've got basically a sort of neutral to positive tier 1 on the German, and a more positive May sort of running forward, plus 3 plus 5 on the tier 2. Eurozone as a whole then, tier 1 plus 3 minus 1 minus 1 minus 1. Tier 2 plus 9 plus 2 plus 2 0. So we've got we had strongish April for the Eurozone as a whole. It's looking a little bit soft on the tier 1 and slight deterioration on the tier 2. So the Eurozone is sort of neutral to slightly soft. Don't go away, next two coming up. Right, we're back. Yen, JPY, Pound, GBP. Right, Yen then, tier 1 plus 2, 0, 0, minus 1. Tier 2 plus 16, 0, plus 3, 0. Pound, tier 1 plus 5, 0, plus 1, plus 5. Tier 2 plus 21 for April, plus 1, plus 11, plus 31. So the big takeaway from this is the yen sort of fairly neutral, and the pound is actually romping away. Very, very strong, very strong. Right, next two, CAD, Canadian dollar, AUD, Australian dollar then. CAD then, tier 1, plus 4, minus 2, plus 3. Tier 2, plus 8, minus 4, plus 5. So we can see in this last week we've had a perk up in the CAD data cycle, tier 1 and tier 2. AUD then, tier 1 minus 2, minus 2, minus 3, minus 3. So fairly soft tier 1 on the AUD. Tier 2 plus 10, plus 1, minus 1, plus 2. So slight improvement on the tier 2. Last two coming up. Right, last two, NZD, New Zealand dollar, CHF, Swiss franc, CHF. Right, New Zealand dollar, tier 1 plus 1, plus 2, plus 2, plus 2. Tier 2 minus 5, plus 6, plus 2, plus 2. Right, Swiss franc, 0 all the way for tier 1, and tier 2 plus 8, plus 2, plus 2, plus 4. Right, so New Zealand dollar then, improvement initially in May, starting to roll over a little bit, and neutral to slightly positive on the tier 1. CHF, neutral all the way tier 1, and just consistently on the positive for the Swiss franc. Right, we'll stop it there and do the analysis. Don't go away. Right, let's make a start then. Just to remind yourselves then, ourselves even, the weekly flows then, we had a negative unopposed driver in the dollar at -121, so no backdoor flows, and the opposing positive flows were mainly going into the yen at +51, the pound at +48, and the euro was the positive rock at +22. So, and that was on activity of plus or minus 121. So relatively low activity last week. Basically, activity, remember, is the amount of movement, but you've also got this volatility in the actual highs and lows were obviously the extreme highs and lows were obviously greater. We had a bit of a turnaround midweek in the data, right? So basically, a weak dollar was driving the market, to the exception of all else. We had yen strength, pound strength, and a bit of euro strength as well. Right. So let's have a look at the actual data cycles. Well, the China data cycle is neutral to positive, really. It's not really firing yet. The dollar is very mixed. It's soft on the tier 1 and very strong on the tier 2. So basically it's sort of mixed. It's neutral to positive. And the German data is mildly positive now. So it's positive, and the euro data is pretty neutral across the board. It's -1 and 0, slightly soft, but nothing to write home about. The yen, what have we got on the yen? The yen is pretty neutral, -1, 0. And the pound really is the star. Very positive data on the pound. The CAD, we're seeing an uptick in the CAD data now, so we've got positive data cycle in the CAD, and the AUD is -3 on the tier 1 and +2 on the tier 2, so it's pretty neutral, really, arguably neutral to slightly soft, the AUD. Right, the NZD, mildly positive, so mildly positive, and the Swiss franc is neutral to positive. Okay, so right, that's that. Let's have a look. Let's think about what's been happening. So we had the Fed minutes on Wednesday, late minutes, and the theme has been basically we've been looking at strong PMIs and inflation data, inflationary expectations seemingly rising through the data, and yet the market has started to be, the noise has been that this should be, this is a negative, and that the Fed needs to take notice of this inflationary increasing inflation, and therefore the market was looking at a bit of tapering on the QE and possibly an indication that they were going to raise rates further down the line sooner than later. So, and of course, as we've been saying, that the Fed really has basically told everybody they're going to run the economy hot. They view that this inflation is transitory, so it's going to be short-lived. That's what they think, and yet they're printing like crazy. They're debasing the currency deliberately, really. The purchasing power of the dollar is declining almost day by day, and that is ultimately what they want, because they want to deflate or inflate the debt away, depending on what your perspective. And they can also have wages rising in monetary terms, which will appease the political stance. People will be able to be paid the $15 minimum wage, and whilst in monetary terms their wages will be rising, in real terms they'll be falling. So, but that's a more sophisticated argument. So it's politically it suits the the US government at the moment, Biden's brigade, to carry on with this policy of increasing taxation, printing like crazy, allowing the dollar to degrade the purchasing power of the dollar, so by depreciating. So realistically, excuse me, and you've got this where is it? The dollar here. It's neutral to positive depending on what you're looking at. You've got employment being a slight issue, and yet you've got very strong inflationary expectations and other data, stimulus data, which you'd expect. So and the dollar index is has basically it broke, and it's come so it's at a sort of a double bottom, if you like. It's about 89. It's 89.98 or something like that. So it's knocking on the door 90. So it's come right off. So it's at an inflection point, if you like. And there's going to be people who want to buy the dollar. There will be people who think, yeah, it's bottomed out. So there's likely to be a bit of dollar buying, and you could see a slight bounce in the dollar. But this is going to be slapped down fairly viciously, I would imagine. Right, so we're short the dollar, and we're certainly not in the euro, the pound, and the AUD, and we're short the NZD in the euro, the pound, the CAD, and the AUD. Now, early next week, you've got retail sales for the NZD and the rates decision for the NZD. So the NZD is going to get pretty lively Monday and Tuesday next week. So bearing that in mind. So there's going to be some good volatility in the NZD, and the NZD is one of the more volatile complexes, if not the most volatile complex. So plenty of fireworks in store. We're just going to hold our positions. We expect them to fly around. We're about 5,100 points profit at the moment. It's likely to yo-yo back down to about 3,500, probably, and our peak was about 6,500. So we'll probably lose 2,500 to 3,000 between Monday and Tuesday. Who knows? But that's the likely scenario. So that you may well see a dollar retracement. So anyway, that's what we're doing. If you want a bit more detail on the flows, go to the sister video on the flows. If not, see you Monday the 24th for the daily review. Thank you very much.